You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Wood, editor of Cycles News and Views on CyclesMan.com. Welcome to the show, Tim, and Merry Christmas.
Thank you for having me, Jim, and Merry Christmas to you and our listeners.
What is going on with the markets right now, and how do they set up with your info?
Jim, we have had a short-term cycle top, in conjunction with the December 5th high, and we've moved down into now a short-term cycle low, and we have a bounce underway. And, it's all, we've talked about this before, but it's all about structure. And depending on where this bounce goes, where it tops, how it tops, what the structure of the market looks like, when it tops, does it make a new high above the December high? Does it fail to go above the December high? Does it make a new high but top in a left-translated manner? All that is what we have to monitor. And then, that has to do with the, when I say setup, the setup has to do with structure, with, and the underlying, DNA markers. So what I'm saying is until we get the proper structure with the proper DNA markers, as stretched as this market is, it can continue higher. And then once we see, on the other hand, once we see the proper setup structurally with those DNA markers in place, it's done. And I mean, that's the line in the sand. So the long and the short answer is that's what we're monitoring, is to see that setup. We know that within the context of watching for that setup, that we're dealing with the longest 4-year cycle advance in stock market history, which I think makes this the most dangerous market in stock market history. Now, as far as oil and commodities, we're seeing the deflationary forces there from the setup with the 3-year cycle in the CRB index last December, and then it was reconfirmed in this summer with some structural stuff, and we continue to see those deflationary forces bearing down on the market. I think, or on the commodities market, I think those deflationary forces are a sign. I think they'll eventually bleed over into equity markets, but not until the setup is in place.
And of course, that's the $69 billion question, isn't it? When will that happen?
Yeah, and people ask that, and it's not doublespeak. I know what it'll look like. It's kind of like, you don't know. I don't know what kind of example to use here, but it's kind of like, you don't know maybe what a stranger looks like that just walks in your door, but when they walk in your door. You know what I'm saying? I mean, you know it when you see it. So we've seen a few setups try to develop, and they haven't stuck. And when we see the next setup develop, then we see it develop, and then it's just a matter of, can it evolve, or does it get blown out? So it's you kind of have to work both ends to the middle. You have to know what you're dealing with long term with the statistics, and then we have to work the ends to the middle and looking for the setup.
We'll have more with Tim Wood right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking to Tim Wood, editor of Cycles News and Views on CyclesMan.com. Tim, going into the new year, can we learn lessons from what's happened over this year and where the cycles are going to converge and really tell us something?
Well, Jim, I think that for the new year, let's start with commodities. We should be at or nearing some sort of an intermediate degree low, and so it wouldn't surprise me to see us start, relatively early in the year with some sort of a bounce in crude oil and commodities. Again, we'll know, and I know that sounds like an evasive answer, but structurally, once a short-term low is formed, and then we get, the required structural, developments in place for an intermediate degree low, then we know that that higher degree bounce is underway, and we can expect higher prices. So what I'm saying is that, again, it goes back to the structure. We have to see that develop. But time-wise, I think we're at or nearing an intermediate degree low. So I would think that, we're going to start the year off basically with some a low and rising commodity prices. As far as equities, again, not sound like a broken record, but this thing is stretched out, strung out. It's just not a healthy environment. And I'm surprised that it's lasted this long, but, I would expect, as strung out as it is, that we should see a setup sooner rather than later. I mean, can this go on for another year or 2 or 3 or 4? Does the cycle all of a sudden not mean anything? I mean, no, I don't believe that. And so equities, I'm very, very skeptical. I expect something to set up and cap this thing anytime. But again, until we see it, we haven't seen it. So I don't like equities going into 2015.
What about the precious metals?
The precious metals have been in a counter trend bounce. And I think that's going to flame out because we have the higher degree 9-year cycle that topped back in 2011. We have not moved into that 9-year cycle low. So I think the bounce that we've seen in I think it was November the 7th or 11th, I can't remember exactly, was an intermediate degree bottom in gold. I think it's a counter trend advance. And then on the dollar, it's like I've been saying in the letter for years, it was putting in a much, much longer term bottom. I think that's proven itself now. And, we've got a breakout there. Nothing goes up in a straight line. Nothing goes down in a straight line. But the general direction now for the dollar is higher. The general direction for commodities is lower. Intermediate term, we may be nearing some sort of an intermediate degree top in the dollar. So any weakness there as we go into the new year, I think, or say first quarter or something like that, I think would be counter trend for the dollar. And then I think, the cycles and the statistics tell me that the dollar rips higher, much higher.
And of course, we're talking the American dollar, a real dollar, not our loony.
Yes, greenback. Yes.
Yes. Any hope for countries like Canada that are depending on commodities like oil to pick up?
Jim, the cycle is broken there. It's just, it's amazing when you look at technical analysis. I know this is a hard concept for people to grasp because they look at things and they say, oh, well, the dollar's down, or commodities are down, or oil particularly is down because of the Saudis signing the agreement and so on and so forth. And so that's the reason. I understand that, but I also understand that, it's really about the structure of the market. And I know this is a hard concept to grasp, but if the structure is bullish, then the news is going to be bullish, or the market's going to shrug off any bearish news, and so the direction is up. It doesn't matter. What I'm saying is that it's going to do what the structure says it's set up to do. And the structure, every single time with commodities, it's just simple. I don't want to give away the trade secret, but every single time, 100% of the time, that we've seen a 3-year cycle set up as it has with commodities, which I talked about last December in the newsletter, 100% of the time that has happened, it has resulted in weaker commodity prices, just like we're seeing here. That structure hasn't changed. It's still in effect. It's broken. So commodity prices, overall, sure, there's bounces along the way, but the overall direction is down. Unfortunately, it's down.
Tim, thank you very much for chatting with us, and best of the season to you and your family.
Jim, thank you very much.
My guest has been Tim Wood, editor of Cycles News and Views on cyclesman.com. Check out his newsletter. It's not really a newsletter, as he says. It's a research letter. You're listening to HowStreet.com radio. You can find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. Comments about the show can be sent to info@howstreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at talkdigitalnetwork.com. HowStreet.com Radio is a production of How Street Media Incorporated.